All right, good afternoon, everyone. It is about 4:05 here on Wednesday, January the 4th. Have not done a live event in a while. I am well overdue, but new year, new goals. Want to try and go live every Wednesday afternoon after the markets close. So, a couple things to talk about today. Just kind of setting things up for where we are right now, where we're heading. We do have some videos market updates coming out next week. Also client only Zooms that we're doing. So we'll definitely have more detailed updates. But thought it was a good time to just get together and do a little straight talk. Let's go. All right, first up, before we get into our agenda today, I want to remind everyone, fourth quarter last year, we launched a new podcast series, of course, called the Wealth and Wisdom Podcast, available on every platform you can imagine. Not sure, don't have a device, you can also go to Buzzsprout. There's our address right there. So we'll be bringing out new podcasts the third week of every month. So first up here, what are we going to talk about? Hold on, I did not. There it is. Topics today, right? Where are we? What am I seeing as we kick off this new year? Is it a time to add some bonds? Answer is no, but we will give you some details on that. And then also what is working right now, if anything. Okay, so let me get here to my iPad and let's start off with the SPY, which is the S&P 500 ETF that we utilize. Not currently in it, but it is one that we use. So what do we see here coming into the new year? Most important thing is you can see this definitive line, right? That is your trend line. Until we get above that, we are in a downtrend. So we continue to be in a downtrend until we break above. Don't really see that coming anytime in the near future, but that is a clear line in the sand. Next up, we've got volume. Today, kind of light, 65 million shares in SPY. The 20-day average is 81, which is light because you have between Christmas and New Year's, usually doing about 100 million shares a day. So when I see an up day in lower volume, doesn't tell me there's a lot of conviction here. Now, next up, put-call ratio. So how many puts, people betting on the market's going down versus call. You can see that it has come down quite a bit. Have seen a tremendous amount of options in the markets the last several months for obvious reason. Mostly on the put side. We had a massive amount going into year end. But right now it seems to be a little bit tame. We'll see if we get back in there. I know I kind of been waiting. If we hit that 20 on the VIX, which is down the bottom here, kind of got ahead of myself, but today we're at 22. The VIX Volatility Index continues to be fairly complacent, but if we hit that 20 number, it'll be a good time to add on our shorts and hedges, etc. If you're doing that, we do that in our portfolios. And then companies above or below the 200-day moving average, still kind of strong there. But I'm not really looking at it as too much of an overall indicator. So next, just a quick look at the NASDAQ. This has really been a tough move here. Through today, we're down about 34.5% from its high. That is a pretty bad trend line there. Continues to go down. You know, unlike the S&P, you can see we have not gotten even back to that trend line. So continue to watch this. It seems like we're going to have some more challenges going forward. Another break below. I think you've got some big names as we go into earnings. Apple probably being the biggest one, and seeing where we go on that. So next up, okay, so we talked about bonds, right? Kind of being a little quick here today. Sorry. A couple things on bonds. You can see some of my trend lines here. You know, one, okay, can we stay below 3.81 and then break our trend line, which is 3.57? And we did here for a minute, okay? and I mean a very, very short period. For some reason, my pen's not working. There it is, right there, okay? Got below. I went in, I added about 4% in December. That's it, 4% in bonds. Quite frankly, though, sold. Our signals changed. The biggest thing that we saw in the signal change is right here, okay? You've got the volatility index for the S&P, and then for bonds, you've got what's called the move index. We got as low as, sorry, that's the wrong number. That's actually 115, which was a trend, okay? But 121, yesterday we ended at 129, so still a lot of volatility in the bond market. As I went into the end of the year, I will tell you, I sold off all of our bonds, waiting again. I figured let's start fresh, clean, heading into the new year. And again, until I see us break below that trend line right there, okay, that 3.57, and also the move index to stay below consistently 115, I will not be adding a big number there. So next, what if anything's working? Cash. Cash is king right now, okay? So the good news is we've got some ultra short bond funds out there. Not going to give those symbols here, but we've got ultra short bond funds paying a monthly dividend. Yields right now are anywhere between 3.5 to 3.95. So that's our number one holding right now. What else has started to work in the end of the year? Okay, not sure why my chart did not show up here. So I'm going to delete that, and I'll go straight to the chart here, okay? And this is gold. So this is your gold ETF. We started adding gold mid-November. This has been a nice add, has really helped us, especially in the month of December and starting this year. So a couple things when it comes to this sector. One, you've got gold, okay? We view that as a currency. We'll max out at 12% on that. We also have added gold miners, junior gold miners, okay? Now they are equity positions, so we won't go above 3% on those. You do see a lot of volatility. Had some big moves in those today, but still feel we have some upside. Same thing goes for silver. A lot of volatility in those three, so have to be careful so we won't go above 3%. And platinum would be the last one. So right now, first week, still early. The big thing is earnings. Now today we had the ISM report come out. I posted that early on all the various social media platforms. Came in at 48, okay? Anything below 50 is contraction. Okay, so what that tells us, okay, our story as we head into this year is the growth story. Slow growth, okay, which is going to keep us in what we call cycle 4 for at least the first 2 quarters. But when we start seeing earnings, we feel we're going to see that picture of slow growth. So just a quick update here on Wednesday afternoon. Like I said, we've got our mid-year client event coming up the 11th. That's client only. And then we have the 15th or 14th. I'm actually going to record on Saturday the 14th. We will put out a public video on some details of what we're looking at and where we're going forward. So thanks for watching. As always, make sure you subscribe. Send us any questions or emails. Take care. Michael Loftus, Wealth and Wisdom TV. Hold on, my disclosures are supposed to come up. They don't seem to want to go.